Hey there, everybody. It is Leland the Realtor, and we are going to talk about the almighty seller financing, meaning that instead of getting your money from a bank or instead of coming in with your own cash, you're actually relying on the seller to finance the purchase of a home. So the way it generally works is you make an offer on a home, and if the seller agrees to sell it by holding a contract or holding a loan or mortgage on that home, you would come down with a certain amount of money or a down payment, and it's usually between 10 and 20%, and then continue paying the seller of the home until the home is finally paid off. But there's a couple things you need to know before you decide to go that route. So the very first thing is that this is called a real estate contract, and you don't have the same rights or protections that a mortgage has. So if you accidentally maybe miss a payment on your mortgage, yes, it may affect your credit, but it takes the bank such a long time to foreclose on you that essentially it is very difficult for them to take your home away from you without going through an extremely long process and offering you ways out of getting foreclosed on. On the other side, a real estate contract, whenever you miss a payment with an owner, now it does depend on what your contract states, but generally speaking, if you are 30 days late on your payment, on the 31st day, the seller of that property can actually yank the deed from underneath you and take the property back. So it is very high risk for the buyer. And if anything were to go wrong and you were not able to pay your mortgage, the best thing to do is, of course, to communicate with that seller. But depending on that seller, they could potentially take the house back away from you and it's no longer yours. And you lose your down payment and any monthly payments that you've made on the home. Now, the second item that you really need to know about is, generally speaking, if you are asking a seller for owner financing and you're asking them for essentially hundreds of thousands of dollars, when you make an offer on a property, you're probably going to go with their terms. So you won't have a lot of leverage when it comes to negotiating for the property. Now, of course, every situation is unique, but more often than not, I see people end up paying just full price, potentially over asking price in return for owner financing. Now, the third thing to know is that owner financing is not 100% financing, and they are not going to contribute to your closing costs. They are essentially going to make sure that they leave the room with money. Selling a home costs quite a bit of money to do. You have real estate brokers involved, you have title companies involved, you have inspectors, surveyors, and a lot of people who charge money for services in order to sell the home. So when buying a owner financing home, you're going to need to come up with a minimum of 10 to 20% of a down payment, if not more, to give the seller security. So we're actually going to check out about how much money it takes right now. So as you can see, we put up 123 Main Street here, and the sales price is $200,000. Now, if you were to make no down payment at all, i.e. no down payment at all, and a realtor charged 6%, which is very standard, and then of course right here we have title fees, which is another $2,000, and a survey, after everything, it is going to cost $15,411.22 to close on this home. And that doesn't include escrow fees or an attorney to draw up that real estate contract, which typically costs about $200. So you are going to need to pay the seller at least $15,411.22 for them to not come to closing with money, and instead them leaving with money or leaving with nothing. So in this situation, you would need at least a 10% down payment in order for the seller to leave with anything at all, and they would potentially demand 20% because honestly, they want that security. And if it's your home, you can do whatever you want to it. And if you stop taking care of the home, well, if they take the contract from under you and take that property back, they're going to be the ones doing any repairs that need to be done on the home. So it's not risk-free. And the last item is, of course, the seller must be willing to give you owner financing. And if they have a mortgage on the property, you might come across a lot of issues. If you have a mortgage on your property, that mortgage clause states that if you sell the property, that mortgage is due 100% of it. So if you owe $100,000 or $200,000 on your mortgage, you have to pay it that day. So if the home sells and the owner finances it, but they also have a mortgage on top of that, if the mortgage company finds out that the owner has sold the property, they can call that note due immediately. And if the seller cannot pay it off within 30 days, generally speaking, that bank can foreclose on the home. So be really careful when asking for owner financing. Know what the risks are involved, and you can definitely get amazing deals without spending any lender fees. So I hope you found this information useful. If you did, please share it with your family and friends. If you have any friends or family looking to buy or sell a home, I would love to work with them. I am Leland the Realtor, keeping real estate simple. Have a wonderful day.